Emaar delivers 90 to 95% of projects on time with a 910 reliability score, while Damac sits at 70 to 80% with a 710. Here's the complete developer comparison for Dubai 2026 investment decisions.
Welcome to Dubai Daily, your essential morning briefing on Dubai's real estate market, with insights from Parag Kundalwal, founder and CEO of Consultaa.
All right, Lily, today we're tackling the big four, the titans of Dubai real estate: Emaar, Nakheel, Damac, and Meraas. It's the ultimate developer showdown for anyone looking to invest in 2026.
Exactly. And let's start with the most critical metric for any investor: trust. Or as we call it, the delivery track record. Because a beautiful render means nothing if it stays a render.
Couldn't have said it better. Emaar is the gold standard here. We're talking a 90 to 95% on-time delivery record and a solid 9 out of 10 reliability score. They're the definition of a Tier 1 developer.
Right behind them, you have Nakheel, the masterminds behind Jumeirah. They're clocking in at 85 to 90% on-time delivery with an 8.5 reliability score. Also firmly Tier 1, especially since they're a government-backed Dubai holdings company.
Then we have the dynamic duo of Damac and Meraas. Meraas is also in that 85-90% delivery range, but with a slightly lower reliability score of 8. They're the premium, lifestyle-focused player.
And Damac, the high-volume player. Their score is 70 to 80% on-time delivery with a 7 out of 10 reliability. That 20% gap between them and Emaar is really where an investor's risk tolerance comes into play. They build a lot, and sometimes that comes with delays.
It's the classic volume versus precision trade-off. Now, let's talk about what's coming up: the shiny new toys. What are the big Q1 2026 launches we should be watching?
Emaar is continuing its push into ultra-luxury with the Oasis Phase 2 and expanding its crown jewel, Dubai Creek Harbour, with Phase 4. Their payment plan is the classic balance 60-40, 60% during construction, 40% on handover.
Very mortgage-friendly. Nakheel is firing back with Dubai Islands Phase 2 and, the one everyone's waiting for, Palm Jebel Ali Phase 2. They're running a slightly more conservative 70-30 plan.
And then there's Damac. They are not conservative. They're going full throttle with Lagoons Phase 3 and their new riverside townhouses, backed by an incredibly aggressive 80-20 payment plan. That's a huge tell about their strategy. Maximum leverage for the investor.
It certainly attracts a specific type of investor. And Meraas? They stick to their lane, premium and exclusive. We're seeing a City Walk Phase 3 expansion and Blue Waters Island Phase 2. Expect a 60-40 plan, but with a much, much higher price tag per square foot.
Speaking of price tags, let's look at the financial muscle behind these names. Emaar is a giant. AED 62 billion in revenue for 2025, publicly traded and diversified across malls and hospitality. They are a fortress.
Nakheel is no slouch either, with AED 8 billion in revenue and the full backing of the government. That's institutional stability you can't ignore. Damac is interesting, founder-led by Hussein Sajwani, AED 9.2 billion in revenue, and also publicly traded. Very high volume, very ambitious.
And a fun fact, Meraas is privately held and also government-related, with an estimated AED 5 to 7 billion in revenue. They operate more like a luxury brand, focusing on limited supply to keep prices and prestige high.
Okay, so we have the data. Let's match these developers to investor profiles. If you're a conservative investor, Lily, where are you putting your money?
Easy. 80% Emaar and Nakheel for capital preservation and rock-solid reliability. Maybe 20% in Meraas for a touch of luxury exposure. I'm focusing on established areas like downtown, the Palm, or Dubai Hills. I'm avoiding high risk, 100%.
Makes sense. What about a balanced investor, someone looking for both growth and stability?
For them, I'd suggest a 50% Emaar, 30% Nakheel, and then I'd introduce a 20% allocation to Damac. This diversifies across different price points and gives you a mix of ready and off-plan properties. It's a well-rounded approach.
And now for the thrill seekers. The aggressive investors aiming for maximum appreciation with a high tolerance for risk.
For them, it's about leverage. I'd go 40% Damac to take advantage of that 80-20 plan, 40% in Emaar's new off-plan launches like the Oasis for that early bird pricing, and 20% in Nakheel's emerging projects. It's an off-plan heavy strategy focused on new communities like Dubai South and Dubai Islands.
So let's boil it all down into our final 2026 developer rankings. Tier 1 is clearly Emaar, Nakheel, and Meraas. They should form the core of any serious portfolio, say 60 to 70%.
And Tier 2, which is essentially Damac, is your allocation for yield optimization, that remaining 30 to 40%. You use their aggressive plans and lower entry points, around 1,200 to 1,800 dirhams per square foot, to boost your potential returns.
Compared to Emaar and Nakheel in the 1,600 to 2,500 range, and Meraas hitting that ultra-premium 2,500 to 3,500 per square foot, the price points tell the whole story.
Absolutely. Okay, Daniel, let's wrap this up. What are the key takeaways for our listeners?
First, your portfolio core should be Tier 1 developers like Emaar and Nakheel for stability and resale liquidity. Second, use Tier 2 developers like Damac strategically for yield optimization. We recommend a 60 to 70% allocation to Tier 1.
And third, keep a close eye on the big Q1 2026 launches. Emaar's the Oasis for early bird pricing, Damac's Lagoons for affordable entry points, and Nakheel's Dubai Islands for that premium waterfront lifestyle. There's opportunity across the board if you know your strategy.
A powerful summary. Ultimately, aligning your investment strategy with the right developer profile is the key to success in Dubai's 2026 market.
This has been another deep dive from Dubai Daily. For personalized advice and to build your own institutional-grade real estate portfolio, we highly recommend getting in touch with Parag Kundalwal.
You can reach him on LinkedIn at Parag Kundalwal. Visit consultatdxb.com. That's spelled out as consultaadxb.com. Email Parag at consultatdxb.com or call +971 58 596 4631. You can also find Consulta on Instagram at consultatnow.
Thanks for tuning in.